What's up, everyone? Welcome back to the trading world. Today we're going to be reviewing price action for December 1st, 2025. Let's jump right into it. So, starting things out, I had bias completely right today. We were forming this higher time frame buy model. You can see us start to back test this old opening gap. So this is the gap between the close and the open of a new week. And you can see drag this out in time. You can see the market rejecting it, and now that we've came down, swept out this liquidity, and came up the other side of the curve, now we are back testing it. So in the morning, I had this bias that, hey, we rejected it. Now it's looking like we're back testing it on the opposite side of the curve of this buy model. If you guys don't know what I'm talking about, the market is going to range, it's going to manipulate, and then it's going to expand the opposing direction. We call this market maker buy model, right? And so note this old 1 hour up close candle. Since it's the highest up close candle before this violent aggressive move lower, that was the manipulation. We know this highest up close candle, which is also a 1 hour breaker block. This 1 hour breaker block is going to be very sensitive, and you can see how that also ends up supporting price. So, dropping down into the lower time frame, you can see that's exactly what ended up happening. So, I had bias completely right, but there was a disconnect between that and executing, and we're going to really dive deep into what happened with that. So, as I said, here is a really nice PD ray. Right, this 1 hour breaker. Why this one specifically? Once again, because it comes right before this entire aggressive move lower. And you can see this also comes with, if I merge these candles together, it comes with this gap. So now we have a breaker and for value gap together, right? So drop down to the 5 minute, which is the aligned time frame, and we had SMT here, SMT here, and now all of a sudden you can see, oh wow, this was just a market maker buy model. So pretty cool. Let's go ahead and jump into actual images for the day. So there's actually a lot of interesting stuff today. Probably my favorite trade was, once again, market was bullish. So basically, you're looking for the first opportunity to be bullish. And unfortunately, I was expecting a little bit more manipulation. Turns out that did not need to be the case. We actually went up higher. So sometimes when you have your bias, sometimes if the market presents you an opportunity, don't be scared, right? You might think, oh, we didn't get enough manipulation, but sometimes the market will still present you with a good opportunity, and it's still worth taking. So for me, that was, you can see how we have these stacked SMTs, meaning we have a high time frame SMT. This one was with YM, low time frame SMT, a sweep of this low. So in my opinion, one of the best trades of the day was after we sweep this low, we get this inversion. It becomes very clear on the 15-second, right? We get this 15-second inversion. No, here, let me show you. So here's the 15-second inversion. Looking a little bit more clean. This occurs essentially right at 9:45, which is a 369 time. So add up the digits. 9 plus 4 plus 5 is 18. 1 plus 8 is 9. If the digits add up to 9, that's the highest probability time for a trade for your entry to be. And so you can see this was actually at 9:44, and the reason I'm saying 9:45 is because the entry on a retrace occurs right at 9:45 right here. And so that was a super sniper entry. You can see that occurs right here. So I call this the Jan entry, where after you get the inversion, you can enter on a retrace. That occurs right at 9:45, that 369 time. And then we expand. So I think this was one of the two trades of the day. The other trade of the day that I really, really liked, that I actually took, but I slightly messed up, was this. So you might be like, wow, that looks great. you caught this? You caught this live? Yes, I took this live, but here's the issue, right? We get this inversion, great, right? It's off of the first presented for value gap. That's this gold gap that I have marked out. The reason I have it marked out in gold is because it's not just any first presented for value gap, it's also the Reaper fair value gap. So you guys may remember a video I made like 3 months ago. I nicknamed this, whenever this happens, I nicknamed it. And I'll go through what the Reaper fair value gap means and the first presented for value gap means, but just know when they happen at the same exact fair value gap, I nicknamed it. I nicknamed it the Superstar gap. And so that's why I have it marked out in gold. And dude, every time I've seen the market use this, it's like perfectly reacted off of it. So anyway, that's besides the point. Kind of cool because I haven't seen that happen in a long time. If you guys don't know anything about what I'm talking about, go watch the video I made. It's the Superstar fair value gap. It was like 3 months ago. But yeah, we finally just got another example of that occurring in the market, where we have a first presented fair value gap overlapping with the Reaper gap. The Reaper gap, I'll just tell you real quick, and then I'll get into the trade. The Reaper gap is essentially when you have a breaker. So here we have a breaker right here. And then, so it's a low, high, lower low, higher high. We take this breaker right here, drop down to a lower time frame, and we find a gap in discount. And you can see that's right here. So the gap in discount of a breaker, that's a Reaper gap. See how this is also the first presented fair value gap of New York session. So 930, 931, 932, 933. That's the first presented gap. So this was going to be very, very sensitive. And you can see how the market responded out of that. So I didn't see all that in the moment, but I did love this inversion with all these low resistance highs. So you might be wondering, dude, this looks like a great trade. What do you mean this was a break even? This should not, you clearly didn't get hit break even. Well, this all ties back into the difference between the entry as if you took it perfectly with in your back testing versus the real live markets. In the real market, you might get filled here. And you can already kind of see where I'm getting at, right? If I get filled here, my break-even spot, if I keep my break-even spot exactly where I got filled at, break-evens me out. When actually, this, according to my back testing, shouldn't be a break-even, right? So for those who don't understand where I'm going break-even in this situation, I'm not going break-even at this high. I'm waiting for this internal high to form. I would have gone break even at those highs. And then we re-break this internal high. So that's where I go break even. My break even spot was somewhere here. I get break evened out. And then we expand to projections. So what should I have done differently? Well, do not go break even based off of the fill. Don't go break even based off of the fill. Put your break-even spot based off of where the break-even spot should be if you were to get filled perfectly. That's the lesson here, right? Because if I had put the break-even spot as where I should have been if I got filled perfectly, well, then you can clearly see that there's no break-even, and I go and hit like 3 point something R. So, yep, missed out on this 3R. There's a break-even. Unfortunate, but guys, I'm just going to keep showing up and getting better every day. But it's crazy how close I'm getting here with some of these trades. Absolutely beautiful. Then as well, you could have used this as a first strike. So this was, once again, that was a Reaper gap and first presented for value gap. So this is a Superstar gap. That's what I nicknamed it. And you can see, so we get a 15-second inversion for value gap off of it. So from my back testing, you can use either a 15-second change in state off a key level, or a change of state off an align time frame change of state off a key level, or an aligned time frame inversion for value gap off of a key level. And you can see that when this occurs, this is on the aligned time frame, which is the 15-second with the 1 minute. So if you don't know anything about what I'm talking about, go watch the video I made on flow state a long time ago. But basically, you have a higher time frame key level. Your entry is going to be on a specific aligned time frame on the lower time frame. So if it's a 1 hour gap, it's a 5-minute change in state of delivery or inversion for value gap. If it's a 15-minute key level, it's a 1 minute in change in state or inversion for value gap. And yeah, so in this case, with my first strike model, I'm using a 15-second inversion gap, and then we go up from there. So that's kind of cool. And you could definitely mark this out as change in state too if you wanted to. If you use this change in state, well, then you're going to get terrible entry. So then let's see what else. There was a nice sell model later in the afternoon. So we had that old new day opening gap from when the market got halted. If you guys don't know what happened, we actually, for the first time in like, I think 10 years or so, the market got like, I don't know if it was artificially halted or what, but like I guess there was like some technical difficulties and the market halted for no real reason, which is super rare. Like it hasn't happened in 10 years. Anyway, it created this new day opening gap, which is closed at a irregular time. It closed at 21:30 something, which is not a normal time. But you can see we formed a sell model off of this new day opening gap. And actually, you'll note it formed, you may have heard of this before, you may not have heard of this before, but it formed what's called Wyckoff, which is you form a swing high, you sweep that high, and you sweep that high again. So Wyckoff is when it's basically a high, a high, a higher high, a higher high, a lower high, right? This is the Wyckoff pattern where it's just high, sweep, double sweep, failure swing. Sweep, double sweep, failure swing. This is Wyckoff. You'll see this occur in the market over and over again. It's basically just a market maker buy model, but it's just like it's a pattern that occurs in the market over and over again. Never made a video on Wyckoff, probably should, but yeah, it's just a sweep, double sweep, and then failure swing. And the cool thing about this is you can clearly see that this is a 2022 model. Why? Because we have a sweep of liquidity. So there's the sweep. Here's the breaker structure. Or even you can mark it out as that. It really doesn't matter. Point is there's this placement. And then we have a fair value gap right here. So you see how everything kind of ties together. So liquidity sweep, breaker structure, fair value gap, and stop loss above the high. Like let's say you enter to the midpoint of the gap or something with stop above the high, then all of a sudden, wow, that's 3R, right? If you let's say you targeted that first center for value gap, that's 3R. 2022 model, very very goated, very 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 nice. So yeah, liquidity sweep, breaker structure for value gap. And what's fun about this is we can go down onto the lower time frame and get super precise. This is also a 30-second gap. So we had SMT at the high. So once again, Wyckoff is this pattern where we get a sweep, we get a double sweep with so sweep, double sweep. Obviously it's better if we have SMT. And then the fourth one, so high number 1 is just a random high, then we get a sweep. So that's the second high. Then we get another sweep, that's the third high. The fourth one's a failure swing. Note it occurred right into the sweet spot of this displacement, this breaker structure leg, right? So I can go down to the lower time frame and we can look at that. So you can see here. You guys watch my video on short form video on OTE if you haven't, but look at this, right? From high to low. So we sweep again. From high to low, where do we go? So anywhere from the 0.605 to the 0.79 is OTE. Right here, this gold line is the sweet spot, and you can see we go perfectly to that, which is kind of cool. And basically, this is like the typical ICT OTE, where you look for that leg that breaks structure with displacement, and then you find the OTE of that. And you can see how nice that ended up being. And then you can get very, very precise with this because we have that 1 minute gap that I talked about. So since the market's fractal, you can take an online time frame change state of delivery off of that. So 1 minute 2022 for value gap, and then sweep 15-second change state retest. We go down 8 projections. That's 8R. Advanced trade, but still pretty cool how the market is so perfect like this. And then as well, you could have just taken this as a regular 2022 model, but that's besides the point, right? And obviously, if you wanted it in a higher time frame trade, you could have taken this, where we got stacked SMTs, a sweep, 5 minute change in state. We retested it, then we went higher. I would have just used this for bias, and on the high time frame as well, this was a Phoenix model. We had a SMT with this low. We formed a rejection block. We pushed into it. We went higher off of it. And I have it marked out as Phoenix 0 because, well, if you guys don't know what that is. So Phoenix is when you use a rejection block with SMT. When you tap the midpoint of that rejection block, I named it Phoenix 0. And a rejection block is just a wick. So it's just a wick, like this little line right here. That's a rejection block. It's hard to explain everything every single video, but I'm trying. And yeah, I'm not gonna stop making these, even though obviously it can be exhausting sometimes. I'm not gonna stop making these. And yeah, I think that about covers it, guys. But today was actually pretty clean price action, and I could have taken better advantage of it, but it is what it is. And then here, this is a super advanced trade. I don't know if I'd recommend this, but just a change of state retest off of this, and then we go for projections. So anyway, guys, I'm gonna end this video here. Thank you so much for watching. I'm gonna yeah, I'll see you guys in the next one. Peace out.